Klarman joins us right now in a Squawk Box exclusive interview. And Seth, first of all, welcome.
In the vast universe of finance, few voices command as much respect and attention as Seth Klarman's. The founder of the Baupost Group, Klarman isn't just another financial analyst. He's a beacon of wisdom in a sea of noise. When he speaks, it's not mere speculation. It's a culmination of years of experience and deep market understanding. Today, his message is not one of hope, but of caution. Klarman's recent warnings about an impending market crash aren't to be taken lightly. They come from a place of concern, backed by data and a profound understanding of market dynamics. This isn't about creating panic, but about preparing for a potential financial storm. Keep watching until the end of video to see why this will change a generation. Trust me, you don't want to miss this. The global economic landscape, intricate and multifaceted, operates much like a barometer. It's finely tuned, reacting to even the most minute shifts, and currently, it's signaling an impending storm. A multitude of economic indicators, which have traditionally served as reliable gauges of our financial vitality, are now flashing red, urging caution. To begin with, the surge in global debt is alarming. Both industrialized and emerging economies are drowning in debt, with their debt-to-GDP ratios skyrocketing to levels previously unseen. But this isn't solely a governmental problem. The corporate sector and individual households are also amassing debt at an alarming rate, thereby weakening the very pillars that support our global economic structure.
The first thing is we've been in an everything bubble.
Furthermore, the stock market's current valuations are reaching dizzying heights, often misaligned with the actual performance metrics of the underlying companies. The price-to-earnings ratios, a key indicator of stock value, in major global indices are significantly higher than their historical norms. This suggests a potential bubble, with stocks being grossly overvalued. This inflation in stock prices is exacerbated by speculative trading behaviors and an influx of novice retail investors, lured by the fear of missing out on potential gains. The strategies of central banks across the globe are also becoming a focal point of concern, with interest rates teetering at near-zero levels, and in some instances even plunging into the negative. The conventional arsenal to counteract economic recessions appears inadequate. The relentless minting of currency, although a temporary salve, may be sowing the seeds for future inflationary spirals. On the international front, escalating trade conflicts and geopolitical instabilities are further muddying the waters. The rise in trade barriers, sanctions, and inward-looking policies are causing disruptions in established global supply routes, escalating operational costs, and diminishing efficiency. Additionally, the burgeoning real estate bubbles in major global metropolises present another looming threat. As property prices soar, outstripping average wage increments, a chasm is emerging between real estate valuations and the foundational economic metrics. In summation, these indicators sketch a portrait of a global economy precariously balanced on a knife's edge. Predicting the exact timing of an economic downturn is a Herculean task, but the prevailing signs advocate a defensive stance. Klarman's perspective resonates here. It's not about adopting a doom and gloom mindset, but about embracing pragmatism and gearing up for potential headwinds. Seth Klarman, the visionary behind the Baupost Group, is not merely a titan in the investment realm. He's akin to an oracle in the financial world. His astute predictions, such as his forewarning about the 2008 financial meltdown, have come to fruition with an accuracy that's both commendable and eerie. His seminal work, Margin of Safety, encapsulates his investment ethos, emphasizing the imperatives of risk mitigation and value-centric investing. In a domain that's often swayed by transient market whims, Klarman's sustained success is a byproduct of his steadfast adherence to his principles and his profound comprehension of market dynamics. Klarman's words of caution are grounded in a rich tapestry of experience and insight. His illustrious track record stands as a testament to his expertise. When Klarman sounds the alarm, it's prudent to pay heed. Economic crashes are not isolated events. They ripple through societies, creating domino effects that reshape generations. When markets tumble, it's not just numbers on a screen. Jobs vanish, businesses shutter, and dreams are deferred. The aftershocks touch every facet of life, from housing to education. Families grapple with financial strain, young professionals face stunted career growth, and retirees confront dwindling savings. They become cautious, sometimes overly so, having witnessed the fragility of economic structures. The psychological impact is profound, a blend of resilience born from adversity and skepticism rooted in disappointment. Communities bond over shared hardships, but also grow wary of future uncertainties. This isn't mere speculation. The Great Depression and the 2008 financial crisis offer glimpses into how economic downturns mold societal mindsets. Klarman's warning is clear. A crash doesn't just reset markets, it redefines the aspirations and attitudes of an entire generation, altering the very fabric of societal values and priorities. Economic downturns leave more than just financial scars. They etch deep psychological imprints on the collective psyche of a generation. Witnessing financial instability, job losses, and societal upheaval fosters a pervasive sense of insecurity and doubt. Trust in long-standing institutions wanes, replaced by skepticism and caution. Dreams are downsized, ambitions recalibrated to the reality of a tougher, more unpredictable world. The fear of another crash lingers, influencing decisions from career choices to investments and even personal life goals. This emotional baggage isn't fleeting. It shapes behaviors, attitudes, and values for decades. A generation scarred by economic turmoil often prioritizes stability over risk, safety over ambition, and certainty over exploration. They become the guardians of cautionary tales, passing on their wariness to subsequent generations. The trauma also impacts interpersonal relationships, with many becoming more protective, reserved, and less trusting. Mental health issues like anxiety and depression see a rise as the weight of economic uncertainty takes its toll. In essence, the ripple effects of a financial crash extend far beyond balance sheets, altering the very fabric of societal aspirations, relationships, and outlooks, casting long shadows over future prospects and personal dreams. In the face of economic uncertainty, Seth Klarman offers sage counsel, not rooted in fear, but in wisdom. He advocates for a return to foundational financial principles. Live within one's means, shunning the allure of excessive debt and the temptations of quick riches. Investments should be approached with a discerning eye, seeking genuine value rather than chasing fleeting trends or speculative bubbles. Klarman emphasizes the importance of a margin of safety in all financial endeavors, ensuring a buffer against potential downturns and market volatilities. Subscribe to the channel for more videos like these.